thank you so much for joining us this afternoon.
Thank
Many
you for
analysts are
having me.
pointing to trading gains as the key driver of your performance. But can you just talk us through, the year that was 2019 and the big takeaways for you in terms of your performance?
Thanks, Wally, for having me. 2019 was quite tough in terms of operating environment. We had the election in the first quarter of the year. Transaction volumes and activities slowed down. But immediately after the election, we saw inflow of foreign portfolio investors looking for yield. That benefited our custody business and global market. We've seen inflation increasing, FX is stable, but are concerned about foreign reserves, which has reduced significantly. But for us in Stanbic IBTC, the group delivered resilient results from its diversified business segments, driven by top-line growth as well as gains from cost containment. So if you look at our volumes of global market transactions, as I said earlier, it improved significantly. If you look at our retail business, it's maturing. Volume of underlying transaction improved significantly, and driven largely from digital platform. Our volume of digital transaction increased by 30%, and the fees from electronic banking fees improved by 65%. Our asset under management business from the wealth unit improved double-digit in terms of growth. That's about 20%. But as you know, there's regulatory fee cut in the pension asset management subsidiary, but we're able to counter that effect with double-digit growth. Our debt capital and financial advisory also did well. And as I said earlier, our cost-to-income ratio was 50.4%, lower than last year of almost 53%.
Right. Clearly, the diversity of your earnings is one of the attractive points that many analysts will point to in terms of when they are looking to invest in Stanbic IBTC Holdings. But before we get into the future, I just want you to comment on the cost containment measures that you were able to put in place, because some analysts have also flagged that as a positive in terms of your performance last year.
Thank you. The focus is on digital in terms of our service delivery. If you notice, in the last 3 or 4 years, we've not opened new branches. So we've seen volume coming through. We are scaling up at really lower cost compared to opening branches. We've also implemented a number of initiatives to improve efficiency. We've had a workflow improvement. We've also looked at our processes, and that has led to a reduction in number in staff. Our staff growth year on year it's not significant. In fact, we didn't go head count, and that is coming from a number of initiatives, including energy savings initiatives that we put in place across the network.
Right. And it's moving forward, how sustainable would you say these cost containment gains are moving forward? What other scope do you have to manage costs given the rising inflationary environment?
We'll continue to invest in areas that drive value. It doesn't mean that we are reducing costs as generally, but we are spending in areas that will drive value, that will enable us to scale up without really increasing footprint.
What about your trading gains? How sustainable do you think that is, given how the year has started? I think there is some concern around the attractiveness of Nigeria right now as an investment destination, especially for foreign portfolio investors. Given what's happening globally, no doubt there will be some movement of assets away from emerging and frontier markets. So overall, how do you see things playing out for that segment of your business?
Okay, for that segment, we lead the market in our global market business, and there are various products that we deploy. So our focus is on our clients to deliver financial solutions that meet their needs. So depending on the market situation, there will always be need to come to global market. We don't take our customer custom for granted. We stay close to them, and we believe that we should be able to stay on course and record good income from that area. Because if you look at it,
when you say good income, are you projecting growth from the performance of this year? Or do you think it will probably be at worst flat? Or what are your projections?
The starting point is a resilient performance. We expect that just as we did in 2019, 2020 should also be resilient. Definitely, we are looking for growth in various areas. And as I said, we have different products that you can deploy to different situations, different market conditions when the time comes.
I've got to ask you about the outbreak of the coronavirus and its impact on your business, directly or indirectly. Starting with your customers, Are you already seeing a manifestation of that? Clearly, there has been so much talk about how supply chains are impacted by the coronavirus outbreak. We know a lot of Nigerian companies depend on imported inputs. So what are you seeing right now?
I think the starting point is from the economy as a whole, where we benchmark oil at 57, and currently the oil price has gone down to about $53 per barrel. And because China consumes a lot of oil from West Africa producers, so that we affect globally in terms of economy. But in terms of specific to company readiness, we are sensitizing our staff and our customers as well for us to take personal hygiene seriously. In terms of effect, it has negative potential effect on global markets.
So are you saying it's just potential at this stage? You're not already seeing the manifestation of that in terms of how it's disrupting the business of some manufacturing companies, for instance?
I think it's early days, but we've seen some manufacturing companies, especially the pharmaceutical company, complaining about the fact that they couldn't source some of their raw materials. It's early days. We appreciate the efforts of health authorities and officials in trying to address the issue. We just hope that it won't spread more than where we are, but definitely it's going to have a global effect if it continues to manifest and spread across.
All right. Let's focus on the banking business, and it's a tough environment as you've mentioned, and some are saying it's even getting tougher. How do you wade through this? Clearly, the focus on cost is key, but where is the growth driver in terms of revenue for you, specifically relating to the banking business?
I think for the banking business, our corporate bank have done well. So our retail business, which is private and business banking, PB, has started to mature. That's where we see growth. That's one of the key areas where we see growth. We launched a digital-enabled loan product during the year, and it's during 2019, and the success from there is well encouraging. We also launched our financial banking platform at ease, where we'll be able to attract most customers at lower cost, relatively lower cost. So we see that, and we see volume of transaction going up from our data platform. So we're going to look at introducing products that meet our customers' needs in that area. Of course, our financial advisory business and debt capital, they are also doing well. We focus in that area. We know that the disruption from a lower interest environment is there, but what we do is to counter that with increased volume,
right,
and focus on sectors that are strategic to the economy and very resilient.
Thank you very much for the insight. Obviously, we'll continue to watch your performance moving forward. Adekunle Adedeji is the Chief Financial Officer of Stanbic IBTC Holdings.